Cipher Mining stock closed Monday exactly where it started, at $10.85 per share, which made the regular session look pretty uneventful at first glance. The intraday range tells a different story though, with lows down at 10.47 and highs all the way up to 11.32. That's a pretty wide band for a day that ultimately finished flat. But what makes Monday interesting isn't so much what happened during the main trading session, it's what came after. In the aftermarket, Cipher began showing renewed strength, climbing another 17 cents and holding up in positive territory even as the broader market was quiet. This kind of behavior raises some important questions. What do after-hours moves really mean? Why should investors care? And what does this particular move tell us about the story developing with Cipher? After-hours trading is one of those areas that many retail investors don't pay close attention to, but professionals watch carefully. Unlike the regular session, which runs on high liquidity and huge volumes, after-hours is thinner. There are fewer participants, and price moves can be exaggerated. That said, the reason it matters is that after-hours trading is where institutions, hedge funds, and large players sometimes make their moves outside the noise of the regular day. It can also be the place where news gets digested early. Earnings reports, corporate updates, or filings often drop after the bell, and that's when you see the first raw reaction. So when a stock like Cipher moves up after hours, it isn't just a quirky blip. It can be a signal of underlying demand, institutional positioning, or expectation of catalysts that haven't yet hit the headlines. In Cipher's case, there was no obvious press release or corporate announcement dropped Monday evening, but that doesn't mean there wasn't information moving around. Investors may have been digesting the recent operational update, which showed Cipher mining 241 Bitcoin in August, holding over 1,400 Bitcoin on its balance sheet, and running at a hash rate of about 23 exahash per second. These are strong numbers, and the company has made it clear that Black Pearl Phase 1 is scaling up fast. For anyone who missed that in real time, after hours can be a place to catch up and reposition, particularly if they see value before the next wave of buying during the regular session. Another angle here is technical. Monday's high of $11.32 is notable. Stocks often respect round numbers and prior highs as resistance points, and Cipher has been trying to break into a new range above $10. If traders see that kind of price action, with buyers willing to push toward 11.30 and hold gains after the bell, it can set the stage for a breakout attempt. Even though volume is thinner after hours, it doesn't take much to tip the balance and establish a tone for the following day. That's why so many traders keep an eye on the aftermarket tape. It's like getting a sneak peek at tomorrow's mood. Of course, we can't talk about Cipher without connecting it to the broader narratives driving sentiment. Bitcoin is the obvious one. Mining stocks are leveraged plays on the crypto cycle, and if Bitcoin is firming up, miners tend to benefit. But Cipher has an additional card to play, its positioning in AI and high-performance computing infrastructure. The Black Pearl facility isn't just a Bitcoin mine. It's designed with the potential to host AI workloads, which put Cipher at the intersection of two of the most powerful themes in today's market, crypto and artificial intelligence. That kind of story sells, and in a market that thrives on narrative as much as numbers, it's an advantage. After-hours traders may be thinking ahead, not just to the next Bitcoin print but to the bigger optionality Cipher offers. Eric Jackson's involvement also can't be ignored. He's made Cipher one of his top 3 conviction picks, alongside names like Opendoor and IREN. His thesis is that the market consistently underestimates companies with optionality and infrastructure leverage. When Jackson goes public with those picks, it creates a feedback loop. Retail investors notice, institutions pay more attention, and momentum can build. Opendoor is a great example of how his advocacy helped put a spotlight on a company that many had written off. With Cipher, we could be seeing a similar dynamic beginning to play out, and after-hours moves may simply be the early tremors of larger flows. So why should an everyday investor care about Cipher being up 17 cents in the aftermarket? It's not about the exact number. It's about what it represents. First, it shows that there's continued demand at levels above $10.85, which reinforces that price as a support line. Second, it shows buyers are willing to step in outside the main session, which is often a tell that institutions or better-informed traders see value. And third, it gives us a sense that the next trading day might open with a positive bias, especially if Bitcoin itself is holding firm or trending higher overnight. These signals aren't guarantees, but they're part of the mosaic that investors use to make decisions. Now, let's step back and think about what a video on this subject should communicate. Viewers need to understand that after-hours trading isn't some obscure corner of the market, it's a place where important information shows up first. In Cipher's case, after-hours strength adds weight to the idea that the company is building momentum, both technically and fundamentally. It's confirmation that investors are starting to take the Black Pearl build-out, the treasury of Bitcoin, and the AI optionality more seriously. It's also a reminder that the rally we saw last week wasn't a one-off. Even on a day that finished flat, the aftermarket was telling us that the story is still alive. Of course, we should balance this with the risks. After-hours trading can produce false signals. Thin volume means prices can jump on relatively small orders, and not every aftermarket move carries through the next day. Investors should be cautious about reading too much into short-term action. For Cipher, the risks are the same as ever: energy costs, regulatory pressure, Bitcoin volatility, and the challenge of actually executing on the AI hosting side. Insider sales, which have shown up in filings recently, can also create jitters. These are all reasons why you can't just buy the stock blindly on an aftermarket uptick. But the bigger picture is where the value lies. After-hours moves are often the canary in the coal mine, and when they align with a fundamentally improving story, that's when they matter most. For Cipher, the fundamentals are improving. They're scaling up production, holding more Bitcoin, and positioning themselves for a dual narrative that connects crypto with AI. Analysts are starting to take notice, with price target hikes and buy ratings coming in. And investors like Eric Jackson are reinforcing the idea that this stock is underappreciated by the market. Put all that together, and an aftermarket bump suddenly looks less like noise and more like another clue that momentum is building. So in framing Monday's action, the message is simple. Don't dismiss flat closes as meaningless. Look under the hood at the intraday range, and look at what happens after the bell. Cipher's ability to attract buying interest after hours tells us that the stock is on the radar, that investors are positioning for more, and that the market is starting to price in the catalysts ahead. Whether it's more Bitcoin mined, higher efficiency, or new AI hosting developments, the pieces are lining up. Monday's aftermarket move may be small in absolute terms, but it's part of a larger pattern. And for investors who are willing to follow the signals, it's a reminder that Cipher Mining is one of the names to watch closely as we head into the next phase of the crypto and AI narrative.